this is what a choppy market looks like. And this is what a choppy market does to your account. This is my Funded Next account overview. And you can see that I have losing trades being chopped out, and then I have big moves that give me the money that I want. In this video, we're going to talk about why you should avoid choppy markets and how I look at my charts to identify the best trading setup. And at the end, I will show you how I enter the exact place I put my entries. So if you're new to the channel, subscribe. I also have a free mentorship program. Link will be in the description. Let's jump into the video. Alright, so let's look at how I used to arrive at a choppy market. And probably you might be doing that as well. So we have Monday setting the high and the low of the week. Like that. Alright, Tuesday breaks out, closes outside of the range. Now, using the failed breakout equation, if we have a failed breakout at low of week, that means buy low. But if we have a breakout at low of week, that means continue selling high. And this is what happened. We got the breakout closes outside of the range. So that meant, and this is what I used to do, that I could sell the next day. And you will see we had the sell setup. The issue is that the breakout used to give me a lot of choppy markets. And you can see that even though you could have gotten a sell somewhere, you still get these choppy moves. So what have I changed so far? Now, if you look at my graph here, you see that I have all these break-even trades, and then I also have big losses. So I have decided to cut out all this. Now, I am only left with these high quality setups. And this is the setup that I want to show you how to look for it. Now, also, the price I have to pay for cutting out all these stupid trades is time. Now I have more time on myself, to focus on myself and improving myself as I am improving my craft. So let's go look at the high quality setups that I am hunting for. Right. So number one is signal days. I have reduced my signal days from 3 signals to 1 signal, which is a failed breakout. And a failed breakout is what we have here. So we have the high, we have the low of the week. Price breaks out of the low of the week and then comes and closes back inside of the high and the low. This is what we call a failed breakout. And if we have a failed breakout at the low, that means we buy the next day. And if we have the failed breakout at the high, means sell the next day. Alright, so my trading day, I follow a 7-step process, which is number one, we ask ourselves, are we in the session that we want? So that is timing window. And my timing window is very specific. For Asia, a timing window is from 8 to 11 p.m. New York time. And then London is 2 to 5 a.m. New York time. And then New York is 8 to 11 a.m. New York time. That is the first step, timing window. And then, now, let's do this in live time. We are in the Asian session, so we draw our timing window from 20 to 23. That is step number one. Step number two is we ask ourselves, where is the high and the low of the day prior to the session? So high of day, low of day. So this is the high of the day, this is the high, this is the low. All right. Step number 3 is we let the first hour close. So it sets the high and the low of the session. So have we let the first hour close? All right. Yes, we have. All right. Now remember, we are looking to buy. We are at we had the failed breakout at the low. After the first hour closes, there could have been 2 scenarios that could have happened in the first hour. Number 1 is we pin the high in the first hour or breakout or the low. If we do that, then now the next step gets activated, which is adjust high and low accordingly. Accordingly means according to what the first hour does to the high or the low. And then the next step is we look for breakout. So where exactly are we looking for breakout? We want to see price coming back here, breaking out to the low. So this is what we call a stop hunt. There are stops below here, below here. We want price to come back to the money, give us a breakout. If it gives us a breakout, then we want to see a 1, 2, 3 pattern. So what is a 1, 2, 3 pattern? Now, do you see this move down? This is number 1. And then these 2 candles here. This is number 2. So number 1, number 2 is 2 or more candles that are in the opposite direction. And then now if this candle miraculously comes back to this level and breaks out, that is number 3. So it looks like number 1 is down, number 2 is up, number 3 is the breakout. And if we are at the high, it's the opposite. We want number 1 going up, number 2 going down, number 3 is the breakout. Once we have the 1, 2, 3 in place, then we look for our entry. And our entry is once we have the breakout, if the next candle is opposite, that is our entry. Once that candle closes, that's our entry for the move up. And if we are at the high, if it's bearish, once that candle closes, we go down. Simple as that. That is how I identify my best trade setups. If you got value from today's video, subscribe, and I will see you in the next video. Peace out.